Last night, as I was looking at the markets, doing my daily orders, and I did a quick recording on my screen. It's not something I normally do, but I was recording a live trade that I just closed out, and it's a trade I made using the rules of my Daily Range Breakout system. I've recently written a complete PDF downloadable guide for that. If you haven't read it or downloaded it, I'll probably stick a link down below, or pop over to thetransparenttrader.com to get that. The reason I done it was it gave me a live opportunity to go through, show you exactly how the trade came about. They showed you the setup. It was an inside day the night before, so we saw the setup. I'll show you exactly where I placed my orders to go long and to go short, where I put my stop losses, and then I'll show you exactly where I got out of the trade. Got out on a market order about half hour before. So it's about 10:30 last night. It was a particularly good trade. That's why I like to show you this one. They're not normally all that as good as this one, but generally they just make nice little bits of profit over and over again. So I'll take you over the screen now, show you what I recorded last night. So here we are. We're looking at a chart. Today's chart of euro dollar. I've just closed out about half hour ago. I closed out of a trade I had running today, and it was follow the rules of my daily breakout strategy. So I thought this was a good example. Just quickly walk you through how you do it. I've just written a PDF report all about this, so if you've seen it, then here you go. This is it in action. If you haven't seen it, then I'm sure I'll put a link down below so you can get that. It's a free guide. So what we're looking for is an inside day. This bar we're looking at here, this is a daily bar. This is yesterday's bar. So it's an inside day because the high and the low of the day is within the range of the high and the low of the previous day. So it's an inside day, and what it means is that the volatility's shrinking a little bit. It's getting a bit narrow, and it's likely that the price is going to break out and move substantially, so we can capture a bit of profit one way or the other. So I'll move forward a bit so we can see what actually happened today. So today we've had a massive move to the downside, which has been a great profit. I'll put some lines on the chart quickly and show you where my orders were placed. So my orders were placed last night on this bar here. So what I did is I placed a buy stop order at 11,381.6, so 11 about here. Oh, that didn't draw very well. No. That's the right line. Okay, so 11,381. So if the price broke above this level, it would get me into the trade, it would buy. Or if it was to break out short like it did, I actually had a stop sell order at 1130.1, so about here. And I'll put a line on on this bar where I took profit earlier at 11,108.5. So about there. So here's our inside day. We place a stop buy order just above the high of that day, which was there. Place a stop sell order just below the low of the day, which was there. And our stop losses for those trades are the opposite end. So it's quite simple. If we were to have bought and the price has gone up, our stop loss would have been at this level here, and the opposite. We actually got triggered into the trade when the price dropped down
and our stop loss for that trade was just up here at this upper line. So you can see what happened was price dropped fairly sharply, got us into the trade short here, and carried on all the way down until I manually closed out at the end of near the end of the trading day here manually. And so our profit was between our entry here and our exit here, and that is 4.3 times the size of our risk, which was between our entry and our stop loss here. So it's what I call a 4.3R move. So to put it into perspective, if you were risking, for example, a set risk of 1% of your account per trade, then the move was 4.3 times the 1%, so 4.3% move in your favour. So that's it really. It's the couple of things to take from it. That's how the daily range breakout strategy works. This is not a typical trade. This is much better than they normally are. They're normally just small and consistent wins. Occasionally, this is the second thing to take. When you're trading breakouts using stop orders in the direction of the trend, sometimes your profit can be fairly limitless. It's rare that your loss will be bigger than your predetermined risk or your predetermined stop loss area. It's rare that you're going to get anything bigger than that. But as for your profit, that's fairly much unlimited. It could be, a half an hour trade, it could be a 2-hour trade, it could be, in this case, a 4.3-hour trade. So that's what trading in the direction of the trend does for you. So that's it really. That's an example of trading one of the major Forex pairs using my daily range breakout strategy. I'll see you on the next video.